Jonathan Miller, appreciate you coming in today. I'm super excited. We got an exciting conversation to be had here. Jonathan's joining me. He's got over 30 years experience in the sports and entertainment side of everybody's favorite topic, taxes. But thanks for joining.
Oh, happy to be here. I appreciate it. This is kind of interesting and new to me as well. It's kind of a new concept for me actually doing something like this. So
For sure. And I want to allow the audience to get a little caught up to speed in just who you are, your background, and how you got to where you are today.
So I'm a CPA. Started out in Los Angeles. For about 10 years, I was in the sports and entertainment industry. So we were dealing with very high net worth, very famous people. And that's kind of where I got the bug of doing what I'm doing and bringing that forward, and kept doing it over the years. I tell people that I've been doing this for quite some time. The best reference is that though he was not a client of mine, he was a client of our firm's, is Magic Johnson, and he was actually still playing basketball at the time. So I've been doing this for quite some time, and that's probably a good frame of reference, especially for when I tell people how long I've been doing this. So, and then we also have, I have doctors and lawyers and other clients as well.
Sure.
So, and we can talk a little bit about how that actually gives me a little bit more of a benefit for those that are in the sports and entertainment world.
Sure. So you're East Coast guy, right?
West Coast
guy.
Yeah.
L.A. So how'd you end up here in Arizona?
Met my wife, and she's from New York. We moved to. She came out to L.A. We lived there for a few years, and just felt that Arizona was going to be a lot less of a craziness than living in L.A. We had a lot of good stuff there, but it was living in L.A. got to be a little crazy.
Yeah.
And so we like our little bit relaxed lifestyle out here. It's
a little less traffic.
A lot less
traffic. Still a little traffic here, though.
Yeah, yeah.
So now, do you have your own practice? Tell us a little bit just in terms of, are you with a particular firm for the audience?
I started out in at Arthur Young, which was at the time one of the Big Eight, now then Big Six, Big Four, and not sure what's left. And then came out here, worked for about 10 years with what is now RSM, used to be American Express, and their regional national firm. And then about 15 years ago, started my own firm. And over that period of time, we've I've grown from just me to now we got 15 people, and offices. Actually have sort of a satellite office in South Carolina, and then we've got clients all over the country. In fact, all over the world in some cases.
Sure. Now, what made you or prompted you to start your own practice?
When our firm was with American Express and I was there was a lot of middle management, and I did not like the corporate world. I was not a follower. I was not someone who was going to kind of wanted to do my own thing.
Sure.
And in addition, I felt there was a lot of waste in this corporate environment, and really just felt I needed to be on my own, have my own schedule, have my own clients, and so it was kind of a nice break.
Sure. And then how long do you feel like it took you to build to the point where you didn't feel like you had to go out and find it, or do you still talk me through that?
You really start with you're grinding it out and looking for clients. It takes a while to a point where I remember asking one of the partners at the old firm, I said to him, how do you get your clients? And his response was, I just pick up the phone. Mm-hmm. And so he had gotten to that point. So it takes a good 10 years probably before you really feel like I don't need to market, but that I don't need to really push it really hard.
Right.
And that my referral sources just keep building it up. And you do a good job, for one.
Sure.
If you do a good job and you make your clients happy and you do the right thing for your clients and you give them good advice, they will continue to refer other people to you. That's usually how it is. The other part of starting my own practice is and I tell people this, it takes about 15 years in my experience for the light bulb to go on
Okay.
to wherever you are in your industry, you don't have the answer to everything, but you know where to go, so you're not afraid of an answer.
Sure.
So you're not afraid of a question, because if you don't know the answer, you know where to go to get it.
Yeah.
And that gives you a lot of confidence to say yes to everything, because I'll figure it out.
Right. Well, and I think too, most clients aren't maybe looking for that answer right off the cuff, and especially when it comes to, the tax side of things. I don't think I would expect everybody to have all the answers to. I don't know how big the book of the tax world is. Probably too big to even have it in a book. So, but just being able to say, hey, I don't have all the answers. I don't think anybody would even balk at that, as there's so many small little things when it comes to the tax portion.
Yeah, most people will say, okay, great, find out and get back to me. There are occasions where they've already done their research and what they've found on the internet or wherever they've looked, and so their expectation is, oh, well, you should know too, because I was able to find this stuff. But you don't want to also give an answer off the cuff,
No, yeah.
especially when you're saying, well, this could be the answer, but I want to make sure.
Yeah, let me do my due diligence and check to find out.
Correct. Yeah.
Yeah.
Let me make sure I'm giving you the right answer.
Yeah, that makes sense. Now, we met because I simply did a Google search. Getting into the NIL world, especially with CPA shortage, as you know, CPAs, the industry, it's not dying. There's a dire need of CPAs, but maybe less and less people want to do it. I don't know what it is, but regardless, I simply did a Google search, NIL CPA, and I don't know if it was SEO optimization, but that's how we initially got connected. But I also came to find out a lot of different things about yourself, and we're staring at some of them right here with these books, which we'll get to. But I want to spend a good portion on the name, image, likeness space, which you really have made a name for yourself in, and have partnerships here locally at ASU, and you've spoke there before. But I really want to give you the opportunity to talk about some of the things or the mishaps that you've seen in the NIL space. But what drew you to NIL to even dabble in it, as like you said, you're maybe 12 years in or 13 years into your own practice at the time to want to try to entertain this space?
Well, because we've worked with professional athletes for years, the NIL was all of a sudden on the radar. I remember going to meet with collegiate athletes who were going into the draft, and sitting there with them, I could not buy them a bottle of water. That would have been a violation of the NCAA rules. So there was no middle ground. There was no reasonableness statute. And in addition, most of these kids were getting money anyway. I remember one first-round draft pick. He didn't take any money, but his best friend would come home with with a bag full of, steaks and a new car and everything, even though the player himself was not receiving any direct benefit. It still got to him anyway. And so this has been happening, and I think that my personal opinion is that the NCAA had an opportunity to structure it and roll it out in a better manner. But because of the court case, they lost, then the floodgates opened. And once the floodgates opened, unfortunately, we're in a situation now where it's a free agency for all college athletes. The way that I got into it is we started getting calls from kids who, similar to you actually, Googled us or Googled me, or we started to get them from agents who said, hey, this kid is calling me, or I'm going to recruit this kid because now I can recruit him in college for possibly going into the draft or whatever it is. And so the agents were calling us saying, hey, this kid's getting a check. We need to file some taxes. And then some parents as well, similar to you, they Googled us. So it started to come out in that way. And then realizing that there's a whole market out there, the agents originally, no one wanted to touch it. Now all of a sudden the agents are realizing that it's a good foothold into some of these kids becoming professional athletes, and so some of the agents are getting in there early. The financial advisors are starting to get in there early. So it was just sort of a natural thing that, in dealing with a lot of student athletes who were going into the draft, now we're dealing with them when they're freshmen or even, high school kids that are going into collegiate ball. So, many times we've been talking to 17-year-olds and their parents because the kid is going to go to play basketball at Michigan or whatever it is and is supposed to get a certain amount of money. So it was just sort of a natural progression relative to the things that we had already been doing.
Yeah, no, that makes a lot of sense. And yeah, I think the floodgates is a great term. I know the Wild Wild West is often stated, and I think it's even stated in your book. The one thing that I've always said, coming from a mid-major myself at Indiana State, is the mid-majors are really, really struggling. In the perfect world, which we don't live in, is, hey, I think it's great that these athletes are getting compensated for their own name, image, and likeness. I think that's a positive experience. But what went away alongside or hand in hand or almost at the same time was the transfer rule, where previously you had to sit out a year, and now that's no longer. So I've always said if you had still the transfer rule in place, but with the NIL, it would clean up a lot. Hey, if you want to go transfer schools to take that opportunity, that's fine, but you're still going to have to sit out a year. That's not the case anymore, and that's where you're starting to see, from my own experiences and conversations with coaches at Division I level on the baseball side as well as football and basketball, it gets really tricky to build a roster on a year-to-year basis, right? So, Indiana State basketball is a perfect example. Last year they almost won the NIT. I almost said NIL, NIT. And most of their players, the good ones, are no longer on the roster this year because it's almost as if they're put in the showcase, they're put in the spotlight, and then, they want to test the market. And you can't fault the kid for wanting to do that, right? I don't know the exact financials, from a mid-major Division I, like in Indiana State, but I can't imagine that they're on the same playing field as a Power 5, or a Pac-12 or Big 12 or ACC, SEC. Like, it's probably not even close. But in the perfect world, you have the balance of let these guys get compensated fairly for their own name, but if they want to go ahead and do that, you sit out a year. But that's not the case right now, and that's where things have been quoted as the Wild Wild West. Now, where have you seen – what's your biggest concern with NIL? I know there's a few things that you touch on in your book, and we'll get to that here in a moment. But what's been like the most glaring thing or most obvious thing that you see athletes consistently getting wrong when it comes to NIL?
The difficulty, or at least what I've seen, is an expectation. Both an expectation that this is guaranteed money, which it's not. And as well, a little bit of, and then some people have seen this where if the kids are getting money, they may not be playing at the same level of caliber because there's a fear of injury, which is financially related. But there's also necessarily a standpoint of when kids were in college needing to perform, and that was to get the paycheck when they were done. Well, they're already getting the paycheck now. From a financial standpoint, we've actually seen a lot of wonderful things, not bad stuff. Although there is always going to be the case, I was at ASU, and there's people there that are in charge of the NIL program, and one of them had mentioned to me that one of the kids, one of the football kids, had basically spent all his money. Didn't have enough money for rent.
Wow.
And he had received $250,000. So those things are going to happen, but in my experience, we have found that the kids are a lot more responsible, they're more aware, and it's actually a good thing in my eyes from the standpoint that these kids are looking at how do I structure this to save taxes? So they're starting to think about things that they didn't have to think about until they maybe got into the pros. So at this point, we're really dealing with kids that are a little bit more sophisticated, as well as the schools being very much in control of the NIL programs in the sense of registering with the school, because the school still has to approve things.
Yeah.
To make sure that it's not in violation of one of their other marketing agreements, or that the contract's not in violation of NCAA rules, or even from a legal standpoint. So I've actually looked at this as just an amazing opportunity for some of these young men and women to learn about business, to learn about, how to earn money, how to keep your money, how to manage your money. I deal with, like I said, I deal with a lot of doctors and a lot of lawyers, and nobody teaches them this stuff in medical school. Nobody teaches it to them in law school. And now all of a sudden, you've got 30-year-old physician making $300,000-$400,000, and they don't know what to do with it. And so now we've got 17, 18, 19-year-old kids that are learning about money, finances, and all of the important things that a lot of us didn't learn until our mid to late 20s or later.
Well, and you mentioned at the beginning there the example of the football player getting compensated close to $250,000 and not being able to pay for his rent. You may go, the audience may think, well, how is that even possible? But I found that, if you don't grow up in an environment where there's any financial principles, and between football and basketball, not the majority, but a lot of times those players are coming from could be a pretty rough background. So they didn't have those resources available, and so they don't understand, just like you said, the physician. If a physician doesn't understand finances, imagine a kid who's 18 years old that had an extreme athletic ability but came from a rough household. And, on the baseball side of things, there's a lot of that from a Latin American perspective. These kids sign at 16 years old, and they can't even actually have their own name, assigned to their bank, and so that gets entrusted to the family, right? And who knows what they are going to do with those funds? And they're not those individuals, and from where they come from, they're not taught this stuff either. So if it's confusing for a physician, yeah, it's going to be a little confusing for an 18 or 19-year-old when it comes to how to manage their finances. Now, let's talk a little bit about your book and spend some time there, because we started to talk about it before we hopped on. I was like, you need to save some of this stuff because you can talk about it on the podcast. What prompted you to start writing books, number one, and what prompted you to, specifically write one about NIL?
I've had the book in my head for 20 years.
20 years.
20
That's
years. It was just mulling around in there of, God, somebody needs to write a very simple book for these kids to be able to give them some education. And most of it was from real life experiences of, hey, this is just some good advice. And the first book was actually, because they're written out of order, I wrote the middle book from a time frame standpoint first, which was, wait, don't sign that contract. And it was really meant for professional athletes that were starting out of college. What do I do? And how do I kind of navigate this process of going from a college athlete to a professional athlete? Then the NIL came in, and I said, oh, wow, I now need to add some chapters before,
Sure.
basically explaining what to do before signing the NIL contract. And also, because the NIL money is mostly, it's all 1099 income. So it's no withholdings, not a straight salary, which both gives you a lot of flexibility, but also a lot of pitfalls. Whereas most professional team sports, you're getting a salary. For the individual sports, like, maybe golf or track, you're getting 1099 income. But for the most of the time for the four big professional sports, you're getting W-2 income. Not a lot of flexibility. That's just money management.
Yep.
But when you're dealing with NIL, or you're dealing with the individual sports, just golf and tennis, and the athletics, track and field, stuff like that, now you've got to set things up to be able to deduct expenses, to be able to manage that income coming in, because nobody's withholding any money for taxes. And you can get caught short, because if you spend all the money and don't have it for taxes, there's nowhere else to go.
Correct.
So that's the book was mulling around, and that's where the first book came out. NIL showed up. I wrote the second book, and then after that one, then I wrote the third book, which is, okay, what do I do now that I'm done playing?
Okay.
And, what are the advice? Because, again, I was dealing with people that were coming to me that had retired and they want to start a business. And so many times people sit in my office and say, well, why didn't anybody teach me this? At least once a month, someone in my office says that, whether it be an athlete or whether it be a doctor, a lawyer, or just somebody in business. Where do I learn this stuff? And so I tried to take my experiences with my clients and put that into, a little bit of a overview of what they can do. This is not a textbook. This is much more of a idea of, hey, these are some good suggestions. These are some checklists. These are some ideas of things you just need to be aware of. And the basic premise of the books are you need to have good advisors. And that's really what my point to get across is. This is really complicated stuff. Here's some information. And the basic underlying message is get good advisors, because I could not necessarily go play a sport. I couldn't tell you how to pitch differently or how to play your position differently. That's not my job. That's not where my expertise, it's not where my experience is. So your job is to find the right advisors.
Sure, that makes sense.
No different than you would find a coach if you needed to you wanted to pick up the velocity on your fastball. Well,
Sure.
what would you do? You would probably not Google it. You probably would go find a coach.
Or an agent for that matter, right? And that's where, in our world, we want to partner with individuals where we're not the experts in that matter, right? So when it comes to the tax side, partnering with CPAs that understand the small nuances to all this information, especially, even since you probably wrote this book, there's probably been some changes in the NIL world, and it continues to rapidly change. Now, one of the questions I had is, I want to give you an example. I'm just kind of curious. I'm a football player at ASU, and I just transferred here. I'm making $1 million this year. Where do I start? And what are the maybe 2 or 3 things that are just so glaringly obviously that I need to be taken advantage of that maybe not the everyday person without talking to a CPA may understand?
Well, the first thing is that you need to figure out how much you need to save for taxes. And right off the bat, before anybody starts counting, I say, just save half for taxes. It's probably not going to be half, but I'd rather you oversave. That's the first thing. But from that point forward, the important thing is to make sure that you've got good advisors. There's probably nothing that I could tell someone where they're going to say, oh, that's a great, I'm going to go do that. Set up your LLC, elect S Corp status, set up payroll, look at other opportunities where you can generate more money, or long-term savings or retirement plans. All of that stuff comes into the conversation of making sure you have a conversation of, well, what do you want to do? What are your goals? Some kids have different goals. Some want to do more charity. Some want to just save the money, don't spend it. Others have certain things that they need to do. They may need a car because they don't have one. Other kids have a car, they're happy, everything works. It really depends individually, and that's the most important thing to understand. Every kid is different. Every kid has a different issue. It may be taking care of their siblings. It may be taking care of their grandmother. It may be taking care of their parents. It may be the fact that they are looking at this as, this may be a one and done. I may not go pro, but I'm going to take this opportunity to see what I can do and make sure that I really save as much of this money, because they've got something to do for the next 4 years. Most likely, if they're playing, they're making that money, that's great. There's no guarantee that there's anything after that. And so this money has to possibly, for some of them, last more than the 4 years.
Right.
Others of them, it's money that they are going to leave and not touch, and it's going to be long term. So every situation's different. But the most important thing is, before they do that, make sure you have a good attorney agent who's going to look at a contract. I've seen some contracts where people have given up some of their name, image, and likeness in perpetuity. I've seen contracts where any of the content that they are providing to the social media content is owned by whoever's paying them, and they get to keep it and use it forever. So there's some caution, when signing contracts, which is, wait, don't sign that contract, hence the
Sure.
title of, let's look and see what this says.
Yeah.
And I actually had an agent say, well, why would I want to give this book to any of my clients? I want them to sign the contract. And I look at that and go, okay, well, you need to look at it from a different perspective, which is not that we're trying to tell the kids not to go and do anything. We're just saying, listen, you need to be aware of these things, because anybody who's gone into professional sports knows it's a business.
Sure.
And now college sports is a business. Okay, they have to figure out a way to manage the budget like any other team now. There are general managers out there whose job is to say, hey, you have $20 million of NIL money, go make a team. And so it's not very much different than the pro. And your experience, I'm sure, is they will, to a certain extent, teams will make business decisions. It's not personal, it's business.
Yep.
And so my advice to the kids is, hey, listen, you got to take care of number one, because really nobody else is going to.
Yeah. Well, I think that's good that, you're starting with, hey, make sure you're saving enough. And that example I gave you for taxes, right? We're not even talking about on the investment side. And to be fair, it's unique to each and everyone's unique goals, right? They could be taking care of mom and dad. They could be paying somebody's mortgage. Who knows what that instance is, but making sure that you have enough, because there could be a huge, big surprise at the end of the year if you haven't been doing that. And I think for the most part, these universities are starting to get to the point where they're giving them some resources in terms of like, hey, you need to be aware of this, at least at your larger Division I schools. Now, you say, hey, before you sign it, you got to talk to a lawyer. Like, where does, again, I'm a freshman, I'm making $1 million. Where do I even begin? Do I just do this simple Google search? Is that what I do? Like, for somebody that knows no lawyers?
The hard part is knowing who to trust.
For sure. That's in I
right,
think in anything for sure.
And,
but
and in some cases, the schools have faculty or have worked with, whoever it is. I mean, let's be honest, the booster who donates, if it's a law firm that somehow, sponsors a lot of the university, they're going to get the call. As long as the university feels comfortable that they've got the knowledge and experience to say, hey, if any of your attorneys, want to look at this contract, great. But there's also liability for the attorney as well. A lot of times now, most agents have a law background, or at least have that experience, and so it could be an agent that looks at it. Okay, you and I both have attorney clients that we can reach out to very easily to say, hey, will you look at this contract? So I think that it's really a matter of building the network, and we talk about networking in the book, but building the trusted advisor. Who is their team, okay? And one of the things we do talk about the book, which is my basic tenet, which is there needs to be at least 3 people. You need to have somebody who is on the tax side, CPA, business, accounting, the CFO, if you want to call it that. You need to have the investment advisor, because that's somebody who can help with retirement planning, long-term, short-term, what do I do with the excess cash? And then you've got to have some type of legal team, whether it be an attorney or agent, both of them, to understand the legal side of it. Because I'm not allowed to practice law, okay? That's the unlicensed practice of law. I get in trouble, okay? Most CPAs don't have their series licenses, so they cannot make investment advice, and therefore everybody kind of stays in their lane. And the best part of it is to have a team of people so that, for instance, you and I have a client in common, and we will talk about that. What do we think is the best thing for that client? And you and I will have that conversation. And you and I might say, even to the point of, okay, listen, does he need an estate plan? Okay, who do you use? Who do I recommend? Who do we think is a good fit for him? And let's get him over to the legal side to make sure that he's got an estate plan. But we'll also talk to his agent, because nobody wants to step on, we all have referral sources. Nobody wants to step on toes. So building that team is the most important. having trusted advisors. The fourth piece I think is critical is a mentor. And having somebody, it's interesting because basketball, there's a lot of, AAU basketball coaches that tend to be mentors for these kids. And some of them are really good from a standpoint of mentorship. It could be a family member who maybe an uncle has his own business and he's been successful or whatever it is and has some understanding. Some people, it is a pastor or somebody on the religious side. I had a kid at ASU who just through the Alumni Association, there are business leaders there. And finding somebody that can kind of give you some mentorship to give you a different perspective to listen to and guide you as you have these questions.
And do you think that mentor should have business experience or just overall life experience?
I think life experience is probably more important than business experience because you can always find the business knowledge, but you can't find the life experience.
Yeah, that's true.
That's not something that you can hire. So I think that's part of it, but you want someone that you can relate to.
For sure.
Somebody that gets you and understands you, that you feel comfortable talking to.
Yeah, and I think that's a huge part of it is having somebody. I mean, look, there's been some great coaches that have never played a certain sport, right? So there is the exception to every, but having somebody been in their shoes is extremely beneficial. I didn't get a big signing bonus. I signed for some gas money, so I can't relate in terms of, getting that big bonus, getting it up front. But I can relate to what they're going through and what they're going to go through when they first get to the clubhouse. And so being able to relate to players is huge, even for my own business and for my own clients. Okay, we've talked about we got to save money for taxes. We've talked about don't sign that contract until you have an attorney look over it. What are some things that I can do as a freshman that's making $1 million to save money on taxes? What are some things that are out there as a 1099 income person that's making $1 million? Is there anything I could do to? I'm new to this tax thing. I've never even worked until this year, which technically, when you're playing a sport, doesn't feel like you're working. But is there anything out there for me that I can take advantage of? Like, what could that be?
So initially, what I tell people, and I tell all of my clients this, don't go out and spend money simply because it's deductible. So we talk about, okay, start with what do I pay taxes on? That's the first thing, is what is taxable? Okay, we start with you have $1 million of income. What can you do to reduce that amount? And the answer would be, well, you can deduct business expenses. No different than any other business who has operating expenses, et cetera, can deduct those. Well, then we go into what type of expenses are there that a business could deduct. And that includes anywhere you've got auto, you've got travel, you've got meals and entertainment, you've got office expenses, computer expenses, you have possibly some agent, if an agent helped you work that NIL contract, sometimes there are agent fees, or if it's a marketing deal on social media, you may have a marketing agent. And so some of those are just general operating expenses, telephone and things like that are necessary for you to be able to earn that money. So we start looking at that, and the biggest and most important part of that is you have to keep track of that from day one. So I don't want you to come to me a year from now and say, hey, I have all these expenses, here's how I spent the money. And then we have to then recreate a set of books, so to speak, and organize it. So the second thing would be, okay, let's get you organized. Okay. But there are a lot of things you can deduct, and there are only 3 things that you can do to reduce your taxes in general. And those 3 things are you can put it away in some type of retirement fund, you can give it away by doing charity, or you can buy something you don't need.
I like that.
Yeah, like a new Range Rover.
Yeah.
Okay, and there's some advantages of taking a deduction on that. Not necessarily that you should go do that, but if you're going to do it, and I'm not going to stop you from doing it, then we need to figure out how to take what you're already doing and make it deductible. And so it's about structure, it's about thinking ahead and planning.
Okay, so obviously getting it organized and doing it from day one. Do you suggest these athletes put this thing in an Excel spreadsheet? Like, you know, how do I keep track of this? Do I hang on to the receipt and put it underneath my mattress? What do I do?
Well, I had a track star who was a finance major, so that was working great on the Excel spreadsheet till she got too busy. Now we're doing all of the accounting.
Okay.
Your job is to go play your sport. Unless you're a finance major and you like to do it, the best thing is to unload that onto somebody else. And I try to explain it from a standpoint of every hour that you spend doing your own thing, you're not doing what you need to be doing or what makes you better on the field, which is what makes you money. Unless you work for me, you don't get paid to do accounting. So therefore, the idea is pay someone else to do it and leverage that time to do the things that you need to do, whether that be training, mental preparation, or whatever it is, to be able to perform better at your sport, because that's what makes you more money.
Sure.
We do and use, you can use QuickBooks Online. There are actually some online systems that are free where if someone is a finance major and wants to do it themselves, I will actually teach them how to do their own books and records.
Okay.
But in general, that's not where the skill set lies. So let the experts do what we do, and then, you go play your sport. You make your money there. That's where you make your most money.
Yeah.
And then we work with you on organizing, on how to keep track of your records, how to keep track of the finances and the expenses and things like that. And I always, also ask me if it's deductible. Hey, I'm thinking of doing this. How can I make it more, beneficial tax-wise?
I'll see those videos every once in a while that pop up in like my social media feed talking about, somebody buying a new car for the deduction. And sometimes it makes me think of these athletes that are, they're on these social media platforms. They're on Instagram. They're on Twitter, or X, I should say. And they could be getting guidance from somebody, number one, that they could be licensed. But there's a lot of people that I've seen that are putting out content that aren't licensed. And it can be very easy to follow something that isn't true. And I think that's the other part is, along with mentorship, but finding the right advisors, is making sure that you're getting advice from somebody that is licensed. That's extremely beneficial. I can't tell you how many times, it's so easy to try to chase this shiny object. I had a client 2 years ago talking about cryptocurrency, not a very big name cryptocurrency, but overnight 20,000 gone. And the great part about cryptocurrency is that it's digital and it's instant. The worst part about cryptocurrency is that it's digital and it's instant. And so there was zero way of tracing it. And that was a recommendation, from a friend. And so I worry when I see these things of the old tax deduction by the Range Rover, and these athletes have no idea what they're getting themselves into. Yeah. It's quite scary.
Yeah, you can go buy a $600,000 electric Rolls Royce and get a full deduction for it. But the question is, do you need a $600,000 Rolls Royce? And by the way, $20,000 in crypto. I have a friend of ours who lost 200. It was somebody went into his crypto account and it was hacked. It's gone. FBI called everybody, and there's nothing. It's in some foreign country somewhere.
Yeah, and now with AI rolling out too, I read an article the other day. It was actually, I want to say, CEO of a financial firm that was recently scammed, because now with the AI voice, it's becoming more and more real, where I can replicate maybe your voice or somebody within my circle, right? And hey, this person's got me, whatever that conversation looks like, and he wired money over, boom, gone.
Uh-huh.
And it's super scary.
It's very scary. We get that with where people see things on the internet, or they hear, or this other guy did this, or somebody else did this, and they'll come to me. One of the things we talk about in the book, again, is find your no person. You want to find someone who's going to say, no, don't do that. You can find plenty of people to say, yeah, you're the greatest, and yes, you should do that, and yes, you should do that. But the best advisor you have is the one that tells you not to. because that's harder to do as an advisor from a fear standpoint of, well, then the client's just going to go somewhere who's going to say yes. And I've actually heard a client, not my client, but I heard a client say to one of the partners once, well, do you think that's a good idea? I don't think we should do that right now. There were other factors going in, but the client basically said, well, either do it or I'll find someone else who will. The client it was not a financial issue of can you afford it or anything like that. It was just more of a timing issue of is this the best time to do that? And it's the client's money. This is the bottom line. It's not my money. My job is not to control anything. My job is to help manage it as best we can.
For sure.
And we're dealing with personalities. We're dealing with kids. We're dealing with other factors that come into play. But a lot of times I have physicians coming to me with things that they hear in the operating room. That's one of my rules. If you come to me with anything that was said in the operating room, I'm not listening.
Can only imagine what some of those might be.
Oh, yeah, so-and-so doesn't pay any tax. So-and-so, Dr. So-and-so has his assets in an Alaska trust. I'm like, okay, fine. And I've fired clients over it. I've had clients come back to me after they realized that the person that they're speaking to was basically putting them in something that paid them a lot of money, but not the client.
Yeah.
You and I both know that financial advisor, the term is very loosely used very loosely today. But you're not allowed to say you are a financial advisor unless you have that certification. CPA. People think they are talking to a CPA, but they are not. They might be talking to an enrolled agent. They might be talking to somebody who's just an accountant. But there is a big difference between a certified public accountant, an enrolled agent, and just somebody who has is just, quote unquote, an accountant.
Yes.
And that's one of the things you really need to understand when you start you got that $1 million. Okay. How do I know that you are certified? How do I know what your record is? And talk about it in the book. Go to FINRA, go to brokercheck.com and double check. And we've had people come to us and tell us the story, and we'll go on BrokerCheck and go, the guy has lost his license. He's not even licensed to practice now. Or he's got 15 complaints against him. And nobody bothered to look that up. It's just so simple to look up BrokerCheck. State Board of Accountancy, you can look me up, look at my record. State Bar, you can look up somebody's State Bar record. And the Players Associations have records of those people that have done bad. I know I get the NFLPA notifications when somebody does something and it's not right. I'm working on one right now where there's a case, and I think we've actually talked about this a little bit, is where's your bonus taxed, your signing bonus.
Big one.
Yeah, and there are specific things that must be in a contract for you to be able to get your signing bonus taxed in possibly a tax-free state like Florida or Texas. You can't just say, I'm in Florida now, I'm going to sign it here, therefore it's tax-free. Especially in California, they'll come after you, they will find you, and they will penalize you. And so I've seen some abuses of that, but these kids don't necessarily know that that's a bad thing. So we've had some instances with that and talk about, hey, you got to trust but verify.
Well, yeah, it's funny you bring that up because when we did talk about it, that's where, I don't work on the contract side of things in terms of, that's done with the agent and that's what they do. That's what they specialize in, just like you specialize in what you do. But when it comes to these bigger dollar amounts, it makes such a drastic difference in terms of where you get taxed. And I will say that agents get compensated on the gross amount, not the net amount. But really the end goal for these athletes is not to be getting the most amount of money gross. It's about netting, right? Keeping as much as you can than it is grossing as much as you can. And I find there's a huge lack of education around that particular topic, and it's too overwhelming. But that's where, from a baseball perspective, if that agent has good relationships and I'm a top 30 pick, it's a simple conversation to be had with the organizations because, like you said, it comes down to contract language, and if and when and where you get that amount of money matters a lot. But not to have that conversation prior to the draft is crazy to me, because we're talking about if an individual is 18 years old and they're getting a 7-figure dollar amount, we're talking hundreds of thousands of dollars, depending on if they're, let's say in the state of Arizona getting taxed versus the state of California, right? And you have a 6-figure dollar amount growing at 7% over the next 30 years. And then, oh, by the way, that's going to continue to grow for another 30, pending any, death. It turns out to be a huge number later. And that's what I like to do is, when people come to me, it's not just saying, hey, you should stay invested, just write it out. It's like, I'm going to show you why you need to write it out, or show you why you should look at investing depending on their situation, and showing them, hey, instead of buying, and I actually just posted about this last week. So Juan Soto, I don't know if you saw, he took care of his teammate to get his jersey number that he wanted, number 22. So he got a fully loaded Chevy Tahoe, $92,000. And what I was speaking to was, hey, when's an appropriate time to buy, a fully loaded Chevy Tahoe that costs $92,000?
When you have $700 million.
$750 million. But yes, no, that's exactly right. And I said not in the 5th round when you get $500,000, because, you're probably only seeing half of that, right? When it comes to after tax, then you have your agent fees, which is typically anywhere from 3 to 5%. So when it's all said and done, you have $250,000, let's just say, and then you spend
$100 on a car.
$100 on a car. It's idiotic. But when you can say, hey, I'm all for rewarding yourself when you get there, right? When getting drafted is a huge accomplishment. You should be able to reward yourself, but let's just be smart about it. And so going through and showing, hey, maybe not $92,000 in an instance of, somebody that's a 5th rounder and $500,000, but let's look at something else, maybe 40. And if we took $40,000 of your total amount and put it towards your long-term goals, here's what that's going to do in 10, 20, 30 years. And that to me has been more impactful than saying that's dumb, because people don't relate and they don't understand this. And quite frankly, not only athletes, but most professionals, their financial goals probably aren't in the top 5 things that are most important to them, unless they're trying to retire in the next 1 to 5 years. Then all of a sudden it becomes really important. But you get so busy with life, right? You're raising kids, you're working, you just get consumed with your life, and it tends to not fall within those first 5. But that's where partnering with somebody to help you get you there, and I think you spoke to it earlier, and pay somebody to do the work for you, because every hour you spend, right, it's taking away from what you could potentially be putting back forth into your own business, or in this case for athletes, back into whatever that may be. And but yeah, that post got quite a bit of stir. But my simple point was, let's just be smart before we make any big purchase, right? And this money doesn't last forever. And that's where I personally have, seen guys go wrong, is that they assume that they're going to make it to the big leagues, or they assume that they're going to make it, in some fashion, and it doesn't pan out. It's really freaking hard to get there. The 2 toughest things, I was always told, is make it a AA and to stay in the big leagues, because everybody's coming after your job, and so you got to be really smart. And if you do it, right, in the worst case scenario, you can still set yourself up pretty good.
Yeah, and it's not only about necessarily spending less, but the important thing, as you said, is saving the difference. So if you can structure your contract so that you can get taxed in a different state, that'll save you a few $100,000. The question is, what are you going to do with the few $100,000? Is that mean that it allows you to buy a house, which could be a real estate investment, not necessarily an expense that's going to go away, but maybe that helps you get into a house, or it's invested in long term and it's kind of put aside. You have the 10-year bucket and the 20-year bucket, whatever it is. And that's the most important thing when I tell people is, hey, we're saving this money on taxes. What are we going to do with the savings? If you're just going to spend it, you get a nice dinner out of it.
Sure.
But if you're going to look at it and say, okay, for my overall wealth, how can I use that extra savings to do something better, and put it aside for the future,
Yeah.
whether that future is 1 year, 5 years, or 20 years.
Yeah. I always encourage people to automate everything. And what I mean by that is, if it hits even for my own self, if it's in my bank account, I'll probably find a way to spend it. But if it's not in there, if I have my X amount for savings, X amount for taxes, X amount for whatever that is, I don't find a way to spend it when it's not hitting my bank account. And so I always encourage people, especially, I think one of the toughest things, especially being in the United States, we're consumers, right?
Yep.
Americans like to spend money. And it's the battle of, as your income increases, your lifestyle increases, and the lifestyle creep, everyone's heard of it, but okay, if I get an increase, I need to increase my savings as well. And what a lot of times, what people do is that increase in money comes, but the increase in savings doesn't come. So they start to succumb to a certain level of income. And you spoke to, hey, guys transitioning out of the game, or gals transitioning out of their respective sport. When you go from making, 6 figures or more, or $7-figure dollar amount, or even more than that, to then, hey, you made a little bit of money, but maybe not quite enough to, hang out in the Dominican Republic every other weekend. You still got to go back to work, and living off of a fixed income, so to speak, right? They're on a normal salary. It can be really challenging for some of those guys. And, but trying to automate, in my opinion, is the best way, to where you avoid the temptation to spend it. If it's going in, somewhere, it's really hard to spend money that's getting directed somewhere else.
Yeah. You mentioned the transition. So the transition out of athletics is sometimes very unexpected. Sometimes it's planned. Not everybody gets to be, Tom Brady and just decide when they want to retire.
Is he retired?
I don't know. I think no, he's working.
I
guess he had to go back to work. He's on the TV now. But you have to, unfortunately, you have to plan for whenever that day happens, even though you don't know when it's going to be. And what I talk about, and the big statistics everybody raises, 78% of athletes go bankrupt, within 3 years after. And a lot of times that's not because they were dumb while they were playing. It's because they didn't have a plan for after. My description in the book is, you're driving 70 miles an hour, and then all of a sudden your off ramp comes and you got to slam on the brakes. You're not going to be able to hit that off ramp safely. You're going to slam on the brakes and skid for a while. And that's what happens. If you're not ready for that exit, then you end up with spending while you have no income, because you're trying to either live that same lifestyle, or you're trying to get back in the game, or whatever. So planning for your transition is something that you need to start you almost need to start it the day you start.
You do.
You have to plan for the exit. And even if you start a business, and we talk about this in the book, is what is your exit scenario? Is your exit scenario to pass the business on to your family? Is your exit scenario to retire and just close the doors? Is your exit scenario to sell it? And you have to think about that from day one when you start a business, because you have to be able to structure yourself to hit that mark. Okay? And so what's important is, again, you have the advisors say, hey, I want to do this. This is where I want to be. I'm planning, and et cetera, whatever it is. And the other part of, we talk about transition, is networking. And the importance of using your name, image, and your likeness when you have one, because I have a name, not much of an image, and I guess people like me, but not enough where I'm going to get $1 million a year for smiling on TV. So therefore, use that opportunity to meet people that you otherwise would not be able to meet. I could not necessarily call up the CEO or the VP of a major corporation and say, hey, I want to go have lunch with you. But if you are a top draft pick, or you are a common name, or regardless of where your circle of influence is, you have opportunities to meet people and pick their brains. So if you're just in college, you have an opportunity to meet the boosters. So you can talk to those boosters. Some of them own car dealerships. Some of them are insurance salesmen. Some of them are in real estate. In the off season, get an internship, because it's not so much that you may have enough money when you retire at age 30 to do absolutely nothing but sit on the porch and have shrimp cocktails and hang out and fish. But your mind for the next 50 years is not going to do much. So sometimes having a purpose and working is simply just to be out there. And a lot of athletes are very outgoing. And so they need to be in that realm. So meeting those people while you are getting this NIL money, this is a great opportunity. And you want to take advantage of that. And you want to keep those names and keep that networking, because those are the people that may come through for you when you're done.
I think I've seen a handful of athletes that are still playing using LinkedIn, which I think is super smart, because I'm sure in the back of their mind, they're having these same conversations, and maybe it's through a mentor, like you said. But we don't know, and I say we, I'm a has-been, but you don't know when that day is going to come. Mine came in the off season, and it was over a 1.5-minute long phone call, right? One day you're on the team and one day you're not, and it could be an injury. But I always tell guys, let's plan as if you're never going to make it to the league and be delightfully surprised when you do. We can always make plans to adjust when you get there, but to create a plan and a pathway and assume that you're going to make it is reckless. And I say that even with, top end guys, right? Statistically speaking, if you're drafted in the top 3 rounds on the baseball side of things, you have a high likely chance to, or you're going to be given every opportunity to have that chance, right? But it's what you make of it. Doesn't guarantee you anything. You could have 2 elbows, that blow out, right? And so you really don't know. But at least you want to be able to, in the worst case scenario, have something to show for when it's all said and done. What you don't want to do is, in the worst case scenario, is when it's all said and done 6 to 7 years from now, not only are you potentially going to school if you're drafted out of high school, and 9 times out of 10, I don't know what the stat is, I'd be actually really curious to know, but I'd say 9 times out of 10, they don't even go back to school, right? It's very challenging when you are 25 or 26 years old and you're going to be a freshman in college, and to try to get that brain going back on education, it's really tough. I didn't finish my degree quite. I had like 15 credits worth, and I wasn't able to make it back my first season, off season, but my second. It took me a little bit to get the gears going on learning how to study and all that stuff again. And so for those guys, can't imagine. So we just want to be able to be in a situation where, in the worst case scenario, is that you at least have a little bit of a head start on your retirement savings or whatever goals you have. And that's where, when you're young, you have the most valuable asset in the world, which is time, especially when it comes to the investment side of things, is the value of compound interest. I think Albert Einstein said it's like one of the greatest powers in the world. But when you get older, that compound interest starts to work a little bit against you because you don't have the amount of time. So it's not as much as in the beginning, it's just starting and going and doing it. To think that you're going to catch up later in life, the math doesn't work out that way. And that's what I get nervous about. And I've seen guys personally that have assumed that, and then they're out of the game. Now they got to go back and get an education. They're essentially starting at ground zero, in the middle of their 20s, which is extremely challenging.
Yeah, it is hard going back to school. It's hard when you have a mindset, and the only thing we haven't even gotten into the ego part of it, which can affect a lot of the financial decisions, a lot of the lifestyle decisions, has to do with the ego of the client. And believe me, doctors, lawyers have egos as well. And that comes into play a lot of times because the Psychology of Money, which is a book that I'm just starting, but somebody had told me one of the best comments was that your wealth is defined by ego minus savings. Ego minus spending.
Okay.
Yeah. So yeah. So in other words, your ego, okay, can drive what is basically spending to make yourself feel better.
Yeah.
And so we have to kind of work through that. You said about the car. There's no problem rewarding somebody for achieving a goal, and as long as that reward makes sense.
Yeah.
I'm not going to spend $25,000 on a watch if I got a $50,000 bonus. It does not necessarily make sense.
Yeah.
And in the same light, though, we always have to, at least from the spending standpoint, have to look at it and say, what is it that takes somebody or gives somebody the edge to get them to be better than everybody else, or to put themselves necessarily in harm's way, on a football field, and or whatever it is. And to some extent, sometimes I kind of have to let them play around, because to have somebody who's out on the field thinking with other thoughts and stuff like that, sometimes that can get in the way.
Yeah.
And so we struggle with the balance of ego and savings a lot.
That's it. Ego minus spending. Is that what you said?
I think it's ego minus spending is your wealth.
Yeah, that's interesting. It makes a lot of sense. I've always said that, the way you spend your money, and or let's say a situation where somebody didn't have a lot of money and now they stepped in a situation where they're due, it reveals your character. It reveals a lot about yourself. It exposes a lot about yourself. And when you get to that point, if you have the ability, usually if you're a charitable person, you tend to still be a charitable person. If you're a spender, you're still a spender. And I think the toughest thing for me as a financial advisor to do is tell good savers to spend and spenders to save. That's the reality of the situation, is that people will save and save and save and have like the scarcity mindset. They get to retirement and then it's like, hey, you can actually spend some of this money and it's okay. We built a plan to get you through retirement based on spending X amount per month. And some of it is come from, there's a generation in which their parents went through the Great Depression. That's still very much a thing, where hiding the money in a sock drawer is still a mindset. But you work your entire life to enjoy the fruits of your labor. And so for those ones that are savers, like, hey, you worked this hard to get here, you should be able to go enjoy it.
Right.
And on the flip side of that, you have your spenders, people that on paper that are making $500K plus, or maybe even north of that, but they don't really have much to show for it because they're spending all of it. And I can tell you pretty close based on your savings amount and what you're making, what you're spending. It's not that hard.
Yeah.
And if you really want a true indication of what you're spending, print off the last 3 months of your credit card statements.
Yep. Oh, yeah.
But a lot of people don't want to do that.
No.
But I think that's one of the more challenging things but it's a reality, right? I mean, again, the balance of living your life, but also being mindful of your future. And so you don't want to be too far on one side or the other, in my own opinion. Obviously, people are going to live their lives one way or another, but like to save all your money and to not enjoy your life when you don't know when your time is coming.
Yeah.
But also on the flip side of things is, spending your money in a way of which you're not thinking about your future, and then all of a sudden you're 55 years old, your kids are out of your house, and you're going, I'm going to start taking this serious. And that's where I'm saying the compound interest does not work in your favor. Putting in double still doesn't play the catch-up game if you were to start, a smaller amount early and allowing that interest to work. But it's definitely a thing that's challenging for people.
And we have people coming in the office, and it's interesting because I had a young couple, and they had done whatever. They had maxed out on their 401k, whatever it was, and they said, "How are we doing?" And I said, I think we need to do more." Newly married, 26 years old, and I said, "Nope, you guys are perfect. I said, you guys are doing everything right." Literally, they were doing everything, and they were going, "Really? God, that feels good to hear." And I try to tell people, "Hey, start early, start small. It's okay. Start small. Little stuff helps. But if you can slowly build that up, that's great." And yes, I do deal with everything from people that are living off of their Social Security because they spent most everything or they can't afford their lifestyle. I have one client who has $40 million and can't spend money. Won't spend money. Why don't you go enjoy it? I grew up poor, and I'm afraid it's going to go. It's really hard to lose $40 million. But, the conversation I had to him was trying to explain to him that he'd have to spend some money in order to structure things from a trust standpoint, stuff like that. Or he would end up, when he dies, his kids are going to give, $7, $8, $10 million to the United States government in estate taxes. And his lawyer's advice was to get married. I was like, oh God, that's bad advice.
So he's not.
Yeah. Well, he has a girlfriend.
Okay.
Yeah. But just get married for tax purposes, I guess.
Yeah. That's not a.
Which isn't the best advice, but
No.
it's the cheapest advice, I guess.
Okay.
As long as it works out the right way. Otherwise, getting married is not necessarily the cheapest advice. It's the most expensive advice. It all depends. So, starting young, I believe you are correct. It's important. The unknown. And even if they have that money saved away and they've got this NIL deal and they don't go pro, you are right. They're going to have a job. We don't want them to dig into that. So part of we talk about we talked about networking and post-career planning is post-college planning and making sure even though you've got this NIL money, let's make sure that stays, as you said, let it work for us. Leave it as savings. Let's try and have the plan where you won't have to dig into it. It's there if you need it, but that's not the plan.
Sure.
So we'll talk about, a little bit more of different ideas. But again, I will say there is not one client that I have that is similar to the other one.
Yeah.
Everybody's got a different, slightly different or majorly different goal in mind or needs, the immediate needs.
Well, and the other part is, again, saying stay invested or start is great, but we have a system that doesn't teach financial literacy. And until that becomes a thing, most people don't understand it. So to be able to show somebody, here's what $100,000 would do over 30 years. And oh, by the way, if you added to that, just like $500 a month between now and 65, and it's like, you see their brain go, whoa. And it's like, yeah, that's because we have time on our side. What we don't want to do is this situation. And so I always just try to relate it, make it relatable. And the biggest thing that I tell guys is, hey, your friends that are still in college, that are about to get a corporate job in the next year or two, if they're college kids, they're going to contributing to that 401k, okay? You got a jump start on them. You got this opportunity, an upfront amount, and the team has expressed their interest, and their interest is with that check that you're given. But eventually your friends are going to start catching up, right? They're contributing, they're growing their careers. And so, again, in the worst case scenario, you have an opportunity to get a jump start on, essentially your long-term financial goals. What you don't want to do is just look back and go, man, and that's where, for whatever reason, it's the car. It just seems to be the car, and it's maybe that's why that post was relatable. Was maybe some people know somebody, because it doesn't even need to be an athlete. It's the car payment, because your largest wealth building tool is your income, and when you have your mortgage and 2 car payments, I mean, it starts adding up, and it's really hard to build significant wealth if you don't have any income or savings for that matter. So. Lastly here, I want to give you an opportunity to talk, for somebody that's just tuning into this podcast, hey, I'm an athlete. Where do I get my hands on some of these books here? Where do I find it? And give us an idea of where we could possibly pick that up.
So it is available on Amazon, all 3 of them. And I'll explain this piece in a second. This is something that I just came up with within the last week. Available on Amazon, but I've pretty much told any athlete, any college, if they want one, just let me know. I will be happy to send the books. I want people to learn. I want someone to say, hey, this is a good idea. I mean, I have a nonprofit that we've created. It's on the side. It's called the Just One Project, and it stems from an experience I had actually as a summer camp counselor where the director said, we have 300 kids coming through here every year, and if you've affected the life of just one kid this summer, you've done your job. I'm not going to change the world. I'm not going to be able to reach every single athlete. But if just one kid is able to get and understand and maybe start saving some money, one of the things I do talk about in the book is that athletes are very generous and very good for the community. And I think that if we as a society realize that, yeah, the athletes are making a lot of money, don't complain about rich athletes. I said, first of all, you're buying the tickets. You're watching the games. You're spending on DirecTV. That's where they get their money. But also, athletes tend to be very community-minded, and the wealthier athletes give back to the community. And we see that a lot. And I think that that actually bodes well for them in creating wealth because they want to have an impact. So what I tell people as far as the books go is I will give them out. I will come talk to a college. I will come talk to a high school. I will be happy to talk to a team and just kind of talk through a lot of what we've talked about. So for anybody who finds the podcast and says, hey, God, I really would love to get these books, it's just reach out to you and let me know. I'm happy to send a book and read it, take notes. I'll send you two. So you can read it, and then you can give it to somebody you think also needs to read it, or maybe a parent or maybe your mentor. So that's really the goal. This was not meant to be a money-making proposition. It was really meant to get the message out there.
Well, the nice part, it's an easy read. I still have yet to finish, but you can nearly knock this thing out in a night. Or you just do a chapter a night, and you could be done with this thing in a week or two. So it's an easy read. It's not extreme complexity to it. I always joke like the largest book I ever read or didn't read was the third Harry Potter book. I got halfway through and I gave up. It was too big for me. So this was perfect for me. So last question I have, and then we'll wrap it up here. Being on the financial side, I like to ask my guests, what is the best investment, and it doesn't need to be an actual investment, but what's the best investment somebody can make?
Oh, that's tough. I don't know that I have the answer to that one. That's where you come in. What is the best investment I can make?
Well, and so
in yourself, there's that old cliche, make an investment in yourself. But you really have to look at what your needs are, and from an investment standpoint, the slow and steady. You'll hear everybody out there who makes these investments and makes a lot of money. But what you don't hear is people going and bragging about how much they lost. So if you just listen to the people that said, I did this deal and I'm making all this money, that's great. Maybe they just got lucky, the timing was right, whatever it was. It doesn't mean that that's going to happen every time, because a lot of times you don't sit around with a bunch of people and hear them complaining about how much money they lost or stupid things that they did. So I really don't have an answer to that other than the best investment you can make is a little bit of knowledge and finding the right advisors.
Yeah. Awesome. Well, Jonathan, I really appreciate the time. I'm super excited to get this out, as there's not a ton of people in your space doing what you're doing, which is just more educating. And I'm excited to get this out there to people that really need it. So I want to thank you for your time and appreciate you being here.
This is awesome. I appreciate it. This was kind of fun for me, too.
Good deal. Thank you.
Any opinions are those of Jason Van Skyke, financial advisor, and not necessarily those of Raymond James. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Expressions of opinion are as of this date and are subject to change without notice. This information is not intended as a solicitation or an offer to buy or sell any security referred to herein. Investments mentioned may not be suitable for all investors. There is no guarantee that these statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Investing involves risk, and you may incur a profit or loss regardless of strategy selected. Indices are not available for direct investment. Any investor who attempts to mimic the performance of an index would incur fees and expenses which would reduce returns. International headquarters: the Raymond James Financial Center, 880, Carillon Parkway, St. Petersburg, FL 337, 16 800 0248 863 raymondjames.com. Copyright 2024. Raymond James and Associates Inc. Member, New York Stock Exchange, SIPC. Copyright 2023. Raymond James Financial Services Inc. Member, FINRA/SIPC. Raymond James is a registered trademark of Raymond James Financial Inc. Investment products are not deposits, not FDIC, NCUA insured, not insured by any government agency, not bank guaranteed, subject to risk and may lose value.